Good morning, treasurers. This is your host, Parthesh Shah, co-founder of Fintech, and you are listening to Night Snippets. And in the international market, US Treasury yields consolidating now after 25 basis point increase in 1 month. US 10-year was unchanged at 1.15 percentage points and 30-year was unchanged at 1.88 percentage points on Tuesday. As we have repeatedly said, 1.25% mark for a 10-year is a solid resistance in the medium term, and yields have found a new range of 110 to 120. In the crude oil market, crude is at $57.12 per barrel. Market seems to be range bound but inching towards $60 per barrel. Crude's short-term range is 54 to 57. As you know, we are much closer to our $60 per barrel target for crude. One interesting fact, OPEC Plus group's compliance with the oil production cuts fell to 75% in December 2020, one of the lowest levels since the pact was enacted in May 2020. This shows the eagerness of the countries to ramp up the production once the demand is back, and this would limit the upside on the crude. In the currency market, dollar index or DXY is at 89.95. DXY's today's range seems to be 89.64 to 90.25. As we were skeptical on the strength of DXY, it exactly turned out so and could not hold 90.50 levels and retreated to 90 levels. Now the dollar movement is pretty much uncertain and will depend on equity market performance, new government's policies, new stimulus bill, etc. USD CNY or Chinese yuan is at 6.46 percentage points. USD INR with a high of 73.42 closed at 73.20. As USD INR could not breach 73.50, we are now looking at 73.10 to 73.40 kind of range. In the domestic market, CPI inflation figures are out and are positively surprising, which we were informing you for the last 2 days. CPI for December is at 4.59 percentage points versus 6.93 of November. Yes, you heard it right. I repeat, 4.59 for December versus 6.93 for November. Majority of the market players were expecting CPI below 550, but no one could expect CPI at 459. Again, main reasons for this massive fall in the vegetable oil price, fall in the vegetable prices, and favorable base effect. What does this 4.59% CPI mean? No, we are not looking at the rate cut cycle to start again. There is no possibility of the rate cut in the near future. Rather, this 459 CPI gives a comfort to RBI as they can prolong the accommodative stance without worrying about inflation. I repeat, 459 CPI does not mean rate cuts are coming. Of course, this would be a relief and the market sentiments would be improving. Markets will be positive for today as well, and we are looking at a good trading day for today. 5/22/2025 closed at 515 versus 511 the previous day, marking another 4 basis point increase in 4-year paper. We have seen 15 basis point increase in 2025 paper in the last 4 days. 577 GS 2030 closed at 593 versus 592 the previous day. The increase in the shorter end of the paper was purely because RBI is conducting 14-day variable rate reverse repo operation to normalize the liquidity conditions. Now, if we talk about the SDL auction, the 12th January 2021 SDL auction analysis, our call for UP 10-year at 661 turned out to be a success once again. We will try to sell 661 UP 10-year 2031 at 659 or below, pocketing 2 to 3 basis points or 15 to 25 paisa or 75,000 to 1 lakh rupees per lot in just 1 day. After last 9 months of repetitive success in auctions, it has taught us a lot and has made a lot of money for our clients as well. Has your bank started participating in auctions and minting money? If not yet, do reach out to us on 9930307466 or research at nightfintech.com. That's it for today. You were listening to Night Snippets with Parthesh Shah, co-founder of Fintech. See you tomorrow with the new episode of Night Snippets.